If you're thinking about buying your first home in Alberta, one of the first questions that usually comes up is where exactly will your down payment come from? It seems simple at first. You save up some money, you buy a house. But when you start digging into it, there are a lot of options, a few rules you'll need to know, and a few mistakes you'll need to avoid. So in this video, we're going to break down exactly what sources you can use for your down payment in Canada. Let's start with the basics. What are the minimum down payment rules in Canada? So if you're buying a home that is priced under $500,000, you'll need at least 5% down. For homes priced between $500,000 to $1 million, that's 5% down on the first $500,000 and 10% on the remainder. Practically speaking, here in Calgary, where you're looking at the benchmark price of homes in Calgary being around $600,000, you're realistically looking at between $20,000 to $40,000 to meet that minimum. And if you're putting down less than 20%, which is very common for first-time homebuyers, you're going to need mortgage default insurance as well. The key here is knowing exactly what's required so that you're not caught off guard when it's time to write an offer on a home. Now let's talk about where that down payment can actually come from. Most people think that it has to come out of your personal savings, and that's partly true, but there are a few more options that you'll want to be aware of. Your own savings are, of course, the most common, and that can be in the form of a savings account, a TFSA, or other types of personal investments. You can also use your RRSP through the Home Buyers Plan, which allows you to withdraw up to $35,000 without tax penalty, provided you follow their repayment plan. Another major source of down payment funds is the First Home Savings Account, or FHSA. This option was created in 2023 and has already become a major game changer for first-time homebuyers. With this, you can contribute up to $8,000 per year, up to a maximum of $40,000, and the contributions are tax deductible. Even better, when you withdraw money for your first home, it's tax-free, so it's kind of like getting the benefits of a TFSA and an RRSP. Then there are gifted down payments. If you've got family willing to help, a gifted down payment is allowed as long as it's from a parent or a close family member and it is a true gift, meaning that it doesn't have to be repaid and that you have a gift letter to prove it. Now, one good thing is that these gifts aren't taxable, but your lender will require that letter as proof. Buyers can also use the proceeds of a home sale or a home equity line of credit. This is pretty common if you're moving up from a starter home. In these cases, your lender will want to see proof that the funds have been in your account for at least 90 days, or they'll want to see documentation regarding the sale or the refinancing. Now, what about borrowing the funds for your down payment? In most cases today, especially after some recent rule changes, borrowing a down payment is no longer allowed under CMHC's guidelines. There used to be exceptions for specific situations, but now lenders are generally required to verify that your down payment is coming from a traditional recognized source, like one of the ones mentioned previously. One other thing to note is that trying to use borrowed funds as a down payment source can negatively impact your ability to qualify for a mortgage. So if you're putting down less than 20%, you'll be required to carry mortgage default insurance, and this comes with a few extra rules regarding your down payment. For one, CMHC and the other insurers will require that your down payment does come from traditional sources. So that means savings, RRSPs, TFSAs, or any of the other sources mentioned earlier in the video. And keep in mind, as mentioned before, they've tightened up the rules in recent years and borrowed money can no longer be used. Now, this matters because if you try to use funds that don't qualify, it can result in your mortgage application being declined. Even in a situation where your lender might be flexible, the mortgage insurance companies will not bend to these rules. So making sure that your mortgage is traceable, documented, and from an approved source is critical, especially when you're working with a smaller down payment that requires mortgage default insurance. It's definitely one of those things that you don't want to find out the hard way when you're halfway through your home buying process. So, how do you pull all of this together in a way that works for you? One smart strategy is to combine an FHSA with the Home Buyers Plan. By using both in combination, you can access up to $75,000 that are either tax-free or tax-deferred. That can make a huge difference whether you're trying to hit your minimum down payment or get your down payment large enough to avoid the necessity of mortgage default insurance. Now, if your family is in a position to help, adding a gifted down payment in addition to your own savings can help you reach your goal faster, or reduce your monthly payments by adding more equity upfront. If you're selling a property or tapping into home equity, remember to have your funds in a bank well before closing. And remember, most lenders will require a 90-day history on down payment funds. As always, I would highly recommend that you sit down with a mortgage broker very early on in the process to hash out all of the details. They can help you figure out exactly how much you'll need and advise you exactly how to best position your down payment sources so that you will have no issues during the mortgage application process. So, if you're planning on buying your first home in Alberta this year, knowing your down payment options and the rules around them are half the battle. Whether it's savings, registered accounts, or a family gift, having the right plan can be the difference between you getting your keys or being stuck in financing limbo. So, if this video helped you clear up a few questions you may have had, please do hit that like button and subscribe. It's a big help to a small channel just starting out like mine. And if you have any further questions, don't hesitate to drop them in the comment section below. Thanks for watching, and I'll see you in the next one.